3 Best Value Stocks for Beginners. Value stocks are publicly traded companies trading for relatively cheap valuations relative to their earnings and long-term growth potential. Let's take a look at 3 excellent value stocks. Berkshire Hathaway minus 0.44%. Berkshire Hathaway New minus 0.25%, Procter & Gamble, PG 0.56%, and Target, TGT minus 0.08%. Then we'll dive into some of the metrics that can help you find the best value stock investments. Berkshire Hathaway. Since CEO Warren Buffett took over in 1964, Berkshire Hathaway has grown into a conglomerate with more than 60 wholly owned businesses, and a massive stock portfolio with more than 4 dozen different positions. Berkshire has steadily increased its book value and earnings power over time, and it operates under the same business model that has led the stock to almost double the annualized return of the S&P 500 index for more than 55 years. Buffett and his business partner, Charlie Munger, have long kept large cash reserves to deploy when they spot opportunity as part of their value investing strategy. In his annual letter to shareholders released in February 2022, Buffett wrote that Berkshire Hathaway held $144 billion in cash and cash equivalents. But Buffett apparently spotted value investing opportunities soon after. He later revealed at Berkshire's annual shareholder meeting that the company bought $40 billion worth of stocks in the 3 weeks after the shareholder letter went out. Procter & Gamble. Consumer products manufacturer Procter & Gamble is the company behind such brands as Gillette, Tide, Downy, Crest, Febreze, and Bounty, but there are dozens more in its product portfolio. Through the success of its many brands, Procter & Gamble has been able to steadily add to its revenue over time, and has become one of the most reliable dividend stocks in the market. The company is just one of 44 stocks to reach the coveted Dividend King status, having boosted its dividend for 65 consecutive years. P&G is a classic example of a recession-resistant stock since demand for its products holds steady throughout stock market cycles. The consumer staples giant continues to post impressive growth. In fiscal 2022, P&G increased organic sales by 7%. And it held or expanded its market share in 36 of 50 competitive niches. Although management expects sales growth to slow in fiscal 2023, the company's size, stability, and diversity of products make it a solid play for tough times. Target. Big box retailer Target has a cult-like following that continues to grow, fueled in part by the popularity of its in-house brands. Sales of Target-owned brands soared by 18% in 2021 to more than $30 billion. Like other retailers, the company's online sales have surged since the beginning of the pandemic. But Target's unique digital model, where 95% of sales, including online orders, are fulfilled by stores, gives it an edge over competitors and allows it to reduce costs and maximize speed. As of mid-2022, Target had a price-to-earnings ratio of around 14, making it cheap compared to rivals Walmart 0.05%, and Costco, cost minus 0.46%, which respectively trade for about 28 times and 42 times their earnings. Another perk for value investors, Target is also a dividend king, having boosted its dividend for 50 consecutive years.